So look, we're entering a very difficult crisis period. Yeah, it's not just a little thing. It's not just, oh, we have a change in the economy because of higher interest rates, or higher inflation, higher interest rates, lower disposable income. That's true. It's interesting, but this comes and goes. That's not really what we're talking about here. We're talking about a fundamental restructuring of the entire diamond industry. Big changes that will be long lasting as well. So one thing we want to think about is real diamonds. And I use the definition of real diamonds the way the Federal Trade Commission says that you're supposed to, which is real means it's natural. There is no such thing as a real synthetic diamond. So when I use the phrase real in this discussion, I'm talking about natural diamonds. So the real diamond market is going to be reduced in certain areas. The attack that we've seen on engagement rings, that's going to go away. But you'll see the soft belly of the beast here is going to be the luxury, not the luxury business, but the fashion jewelry. So the position of real diamonds as a luxury product, like engagement rings, will continue and significantly strengthen over time in the long term. So my belief in the real diamond business is very powerful, very strong, very good, but we may have to go through some hell before we get there. And we'll talk a little bit about this idea of reduced. What do you mean? We're not going to sell natural diamonds? No, you're not going to sell KLM natural diamonds because you can't tell if they're natural or synthetic. So here's a good rule for you. If you get to the point that you cannot detect whether a diamond is synthetic or real, the price goes to synthetics, and synthetic prices, my friends, goes to the toilet. $10, maximum $100. Okay. But we'll get into that later. So we have to realize that synthetics are going to take a bite of the diamond industry, out of the real diamond industry. Now, what's freaking everybody out are these price changes. And this is just 1 year. Actually, if we looked a little more, we'd see that it's more than 1 year. In terms of, we go back to March, you're down 35% on those carriers. So we're looking at a market which is going down, and the rate of decrease, rate that we're going down is increasing. It's going down faster now lately. And so it's very scary. I think that people are afraid, and they should be afraid, and they should be warned, and they should be careful about what they're doing. Will this kind of a situation continue? It's interesting. I took a look at some De Beers numbers just before this call. And by the way, it's nice to see De Beers has finally decided not to promote the engagement rings. They're experimenting, but I'm not talking about De Beers later. The way I see it is this: 2022 sales were $5,794 million for De Beers. We're seeing a 29% drop in the first half. Assuming that drop continues, doesn't get worse, we're talking about a $4.1 billion year for 2023 for De Beers. And I'd probably think about the same 4 billion, maybe a little bit less even. Now, the question is, will this trend continue? Will we see continued dropping of prices? I'm not sure we will, but I would say go with where we are now, and let's think about a $4 billion De Beers year, which means a $4 billion year, which means most people would see, you'll see a decline of about 30%. Now, why are prices going down? What's happening? Reasonable question. It's obvious that synthetics are taking market share. I think that De Beers, this is just traditional seasonal. No, that's nonsense. We're talking about synthetics coming in there and grabbing away sales. So a young couple buying a diamond engagement ring that's a synthetic isn't coming back to the store tomorrow to buy a natural. Not going to happen. Now, some of the changes that we're seeing right now, these bumpy changes, are short-term. For example, the whole engagement ring fiasco. People are saying 50% of U.S. engagement rings are synthetic. And I'll talk about that at some greater length. It's short-term. As prices for synthetics go down, don't worry about it. We will get the engagement ring market back. However, what are you going to do with fashion jewelry? I don't know. They say it's a big number, very big number. Do you think people are going to buy natural diamonds for fashion jewelry when you'll see the differences in price? What is it, 10 times or something the price? They'll probably buy fashion jewelry that looks good, that they feel good wearing, and it could be synthetics. And maybe the question is this word diamond. What does it mean? Just because I call something a diamond, does that mean it's okay? How about cubic zirconia, which I think that synthetic diamond prices will move to pretty much cubic zirconia, Swarovski crystal kind of prices. Now, I mentioned a minute, the synthetics will destroy the higher prices that you can get for real diamonds, natural diamonds, because you can't tell. As soon as I can't tell, it's not there. And look about Mele. Okay, Mele is a very interesting story because there might be demand for Mele from brands. I think there will be for natural Mele, for real Mele. But on the other hand, what's the cost? You take the -2.5, you take the -6. I'm talking about SIB sizes here. Forget about it. The cost of detecting the goods is very high. Now, GI is doing some great work here. I've seen it. So we will be able to sell Mele that is guaranteed to be natural, but it's going to cost quite a bit more because of the testing that's required and the size of the stones. So what we've seen is this kind of scenario where the synthetic people, not just their diamond size, sometimes I think they're synthetic, but where the synthetic people have said, let's go for the low-hanging fruit. My gosh, we can get a 2-carat diamond. We can make a fortune. We can sell it so much cheaper. So they've attacked the bridal markets. Okay, congratulations. As the prices of synthetics go down to $10 to $100 a carat, and you're going to hear me say that a lot. Well, I don't know. What are you going to do? I'll explain that later. But what's going to happen with someone who wants to spend $5,000 in an engagement ring? What are you going to do? Give him a 50? You're going to give him a 50-carat, synthetic? I mean, come on. So what's going to happen over here is the low-hanging fruit of the synthetics are going to go away as synthetic diamond prices continue to fall. But, and she'll say, oh, it's okay, it's okay. No, the next attack that's coming is going to be on the non-bridal diamond markets. Watch out, everybody, particularly people in the fashion area that think about how are we going to handle those markets? What's going to happen there? Now, that's an issue, synthetics. Now, synthetics are going to change the fundamental structure, and we'll talk a little bit about that as well. But we need to be careful with synthetics. Very, very, very careful. Now, sanctions. You might say, okay, sanctions is not a problem. I don't know about it. It's not. No. The game is to see what's coming down the pipe at us. And sanctions are a real fundamental problem. We'll spend some time on it today in this call. But they're also related to global economic world war. This is not a simple story. So we have a hot war going on. I hope that'll resolve itself somehow, but I don't know if and when. But we're also talking about sanctions for all kinds of reasons, not just Russia. The game with China, huge problem over there. The United States is just giving China all this money. I'm thinking that maybe the Chinese military, I said their Navy, that they should create 2 new aircraft carriers. I think one they should name the SS Walmart and the other the SS Amazon, because it's our money that's giving them that money to create those aircraft carriers, for example. But in any case, sanctions are a real issue. We got to look at the deglobalization of the world. We were coming from a world where everybody loved everybody and helped everybody, was kind to everybody. No. There's another game taking place. You can see what's happening with the BRICS. You can see the efforts to change the dollar currency thing. I mean, it's nice they're trying. I don't know if it'll work, and I know it won't work in the short term, but that's telling you what people are thinking and how people are feeling and what people want. So China, Russia, and India is another axis. Well, I should say this. China and Russia and Iran, one thing. India, interesting company, interesting country, I should say. Africa, interesting. They're going to play the middle. UAE, they're going to play the middle. But we will be heading towards currency warfare and natural resource warfare in the medium to long term. That's going to be coming up more and more. And I think it's going to affect our diamond markets as well. There are economic factors, inflation, interest rates, disposable income. We've seen them before. We'll see them again. I'm not freaked out about them. But what I am interested in looking at is the strategic confusion that we're getting. Things are changing, but we don't know why. And so we look at the inflation rates, disposable income. We say that must be the reason. But that's not what's happening, really. We have to look at sustainable change, and we have to differentiate from noise. To me, the economic factors right now are more noise. They're there. They will change. But the advent of synthetics into the fashion jewelry business, or the way in which governments are going to sanction each other in all kinds of ways, that's big change. That's serious stuff. Okay, so those are things that you need to take a little attention to.